If your nonprofit earns income from activities outside its exempt purpose, there's a good chance you've heard about Form 990T. But what exactly is Schedule A and why is it so important? In this video, we'll break down what Form 990T Schedule A is, who needs to file it, what information goes into it, how it connects to unrelated business income, and common mistakes organizations should avoid. Let's get started. Form 990T Schedule A is used by tax-exempt organizations to report income and expenses from each unrelated trade or business activity separately. In simple terms, if your nonprofit earns money from activities unrelated to its exempt mission, the IRS may consider that unrelated business taxable income, commonly called UBTI. And when filing Form 990T, the IRS requires organizations to complete a separate Schedule A for each unrelated business activity. Unrelated business taxable income is income generated from activities that are considered a trade or business, are regularly carried on, and are not substantially related to the organization's exempt purpose. For example, advertising revenue, merchandise sales unrelated to the mission, rental income involving debt-financed property, sponsorships with advertising benefits, and certain partnership income. If the organization earns $1,000 or more in gross unrelated business income during the year, it generally must file Form 990T and attach Schedule A. The IRS requires organizations to separate each unrelated business activity because of what's called the silo rule. That means losses from one unrelated business activity usually cannot offset profits from another activity. So if a nonprofit operates an online store, advertising services, and a rental business, each activity may require its own Schedule A. This helps the IRS calculate taxable income more accurately for every separate business activity. Schedule A includes several important sections. Part 1. Unrelated trade or business income. This section reports gross receipts or sales, cost of goods sold, advertising income, rent income, partnership income, investment income, and other unrelated business income. Organizations also report expenses related to each activity to determine net taxable income. Part 2. Deductions not taken elsewhere. This section includes allowable deductions such as salaries and wages, employee benefits, contributions, depreciation, and other business-related expenses. The goal is to calculate the final unrelated business taxable income for that specific activity. Depending on the activity, organizations may also complete sections related to cost of goods sold, debt-financed income, advertising income, controlled organizations, and supplemental information. The IRS instructions include business activity codes and additional reporting guidance. For most tax-exempt organizations, Form 990T is due on the 15th day of the 5th month after the end of the organization's tax year. For calendar year organizations, that usually means May 15th. Also important, the IRS now generally requires Form 990T to be filed electronically. Here are a few common mistakes nonprofits should avoid. Mistake number 1. Combining multiple activities on one Schedule A. Each unrelated trade or business may require its own Schedule A. Mistake 2. Misclassifying income. Not all income is taxable UBTI, so organizations should carefully evaluate whether an activity is substantially related to their exempt purpose. Mistake number 3. Forgetting business activity codes. The IRS requires organizations to include the appropriate NAICS business activity code. Mistake number 4. Missing deductions. Organizations sometimes overlook allowable business expenses that can reduce taxable income. Form 990T Schedule A plays a critical role in helping nonprofits properly report unrelated business taxable income. While the filing requirements can seem complicated, understanding what counts as unrelated business income, how activities are separated, and how Schedule A works can help organizations stay compliant and avoid costly IRS issues. If your nonprofit earns income outside its exempt purpose, it's important to review your filing obligations carefully and maintain detailed records throughout the year. Thanks for watching. If you found this video helpful, Be sure to like, subscribe, and check out more nonprofit tax filing resources to simplify your compliance process. And for more guidance on Form 990T Schedule A, visit tax990.com.